One of the largest banks in California, Silicon Valley Bank, just seemingly exploded overnight, with the FDIC stepping in this morning and taking over the entire bank's operations and looking to liquidate all of their assets so they can pay out and give restitution to all of their customers. We're going to be talking about all of this, how it happened, what it means for the market, because the market is down pretty bad off the back of this news. And we're going to talk about whether or not this is a contagion situation where there could be other banks or institutions who are affected by Silicon Valley Bank going under. So first, let's talk about exactly what Silicon Valley Bank is and how they found themselves in this situation. Now, this seems to be the biggest run on a bank that we've seen ever since Washington Mutual back in 2008 during the financial crisis. So this is actually a pretty big deal, and it could lead to some greater kind of ripple effects through the market of, is this a new financial crisis or is this more of like a localized issue with just Silicon Valley Bank? So we're going to explore all those topics in this video. So let's go back to the very beginning and kind of explore exactly why this happened to Silicon Valley Bank and what we could learn from this. First of all, as you guys know, the interest rates have been raised heavily by the Fed over the past year now, and that has been causing banks to have kind of a liquidity crisis of their not being as much capital to lend out because there's not as many borrowers. So overall, investors have a bit of a less appetite for risk because they can't make as much money when they have interest rates cutting into their profits of 3, 4, 5, 6% interest rates. So there's just not as much risk going on in the market. So there's less spenders and less borrowers. And this was pretty disastrous for Silicon Valley Bank, as most of their customers are technology-based startups who are, as you know, risk heavy, right? There's a very big risk, and most of these startups will be burning a lot of capital before they ever turn a profit for years. And if interest rates are too high, they might not be able to have the backing and the funding to actually, make their company run before they turn a profit or they can sell it. So basically what happened over the past few weeks is that lots of the bigger investors and bigger customers of Silicon Valley Bank have been pulling out their money because they need to fund their own operations. And because of how banks work, you always need to have a certain amount of cash available to cover all your deposits. And if people pull out money, then the bank has to raise that money somewhere else. So to cover some of this difference, Silicon Valley Bank sold $21 billion worth of bonds, consisting mostly of US treasuries. Now, the issue with this is that their portfolio was yielding it at an average of 1.79, which was far below the current 10-year treasury yield of around 3.9%. So this made it so that SVB recognized a $1.8 billion loss, and they had to cover this in some way. So the way that they did this was by doing a share offering, a really big offering that they did. So they announced on Thursday that they're going to sell $2.25 billion in common equity and preferred convertible stock to fill its funding hole. And from that news, SVB went down 60% in a single trading day, as people were very fearful that there was a potential bank run happening. If you know what a bank run means, it basically is when people run to the bank, they take their money out, and if you don't get there fast enough, you don't get your money. So then also there was some murmurs within the venture capitalist community. People like Peter Thiel and Reuters were kind of talking about how you probably should take your money out of SVB. Doesn't look like the safest thing to have your money in. Now also the bad thing that happened was from these rumors, the people that were planning to buy the stock that SVB was selling on Thursday actually pulled out of the deal. So they were not able to raise that $2 billion worth of funds. So prices collapsed even further, panic ensued, and the stock went down an extra 60% overnight. You can see from this chart, on March 7th, SIVB was at about $267 per share, and by Monday morning, it was down to $39 per share. So very big panic happened across the market. And you can see this panic did not just involve SIVB solely. Stocks like Wells Fargo, JP Morgan, and also Bank of America were all affected by this panic. On the 7th, JP Morgan had their openings at 142.64, and by Friday morning, it was down to about 128, which represented a drop of about 10%. Shares of Wells Fargo also panicked pretty heavily, as on Tuesday morning, they were at about $46, and by Friday morning, they were down to $39, representing a drop of about 15%. And then lastly, we have Bank of America, which was at about $34, and by Friday morning went down to $29, representing a drop of, once again, 15%. And also S&P 500 has suffered some heavy losses as well, Since Tuesday morning to today, Friday, it is down 5% from a level of about $405, now down to $386 and looking like it's going to go lower. So that's the entire backstory of what caused SIVB to go underneath. And now we see that today, the FDIC stepped in and shut down the trading completely and it took over the stock. This is kind of unprecedented because usually, as far as what I see from my research, the FDIC doesn't really step in until the businesses close. But they were so worried of potential contagion fears of SVB that they just stepped in right away and shut it down. So as you can see now, SIVB, the stock of Silicon Valley Bank, stopped trading this morning at about 5 a.m. Pacific time at about $39.40. So now going forward for Silicon Valley Bank, the next main steps is that the FDIC is going to do what they can to kind of sell off the rest of their assets. At the moment, it does seem like they have the assets to cover the funds of the current customers. No matter what, the FDIC will insure up to 250 grand for customers. Most likely, a lot of the heavy hitters in the bank have a lot more than 250K, especially because Silicon Valley is such a cash-rich environment. It's going to be very interesting to see how many people are affected, how many companies are affected by this. So far, I think Binance has came out and said that they're not affected, and I know some other people have said that as well. But it's going to be a very interesting situation going forward. And right now, for current customers of Silicon Valley Bank, the FDIC says that if you just wait till Monday, March 13th, you can call up their office and they'll be able to handle your funds as soon as possible. So that's some good news. So at the time of failure, FDIC says that the bank had $209 billion in total assets. And I believe the number of deposits that they had from customers was like 180 million. So they technically have some leeway on their assets, but obviously they're going to have to, sell some of the assets at a loss or at a discount to ensure that they can cover the funds. So probably not that likely that they'll be able to cover all the funds. But the FDIC did say that they're going to be doing whatever they can to get restitution for customers who lost more than what they can regain. But yeah, so overall, this has had a very big effect because a lot of companies are now coming out saying that they are kind of receiving or they're experiencing kind of bad effects from SIVB. We have FRC, First Republic. They were exposed to SIVB, and you can see they're down pretty big ever since like Thursday the 7th from like 120 bucks, and today hit a low of about 46 bucks. And now it's stabilizing at about 83 bucks. So you can see lots of panic going on. There was also Signature Bank, SBNY, similar thing, right? Once that news came out, very big panic. And from the 7th, it was at about 110 bucks, hit a low of about $61, down 44%, now stabilizing at about down 34%. Also, there's companies like Sunrun, which is a very, very large company here in California that installs like solar panels. I'm not sure if they're nationwide. I think they're just in California. They're also down a bit too. You can see RUN. They announced that they had a $600 million credit lending facility through SIVB. And now that they are underneath, they no longer have that funding. So that's going to cause them some issues as well. So we're definitely seeing some kind of contagion effect go through with all these kind of Silicon Valley companies and these regional banks that were tied and connected to SIVB. It's kind of similar to, if you recall, FTX, right? FTX was a massive brokerage bank in crypto that went down back, I think it was in November. And because they went down, it kind of dragged a lot of people down with them, caused all these other companies to kind of fail and go under as well. That's kind of what we're seeing now on SIVB. So overall, I think it's a very interesting topic. And it's just kind of crazy to see because I personally have not seen like an actual bank fail in my adult career, right? I remember the financial crisis, but I was like 10 years old back then. I don't really remember that much. And now we're seeing it kind of happen in front of our eyes. Now, I don't think this is really time to, yell in fear that we're seeing a widespread financial panic happen because we did see the FDIC take over a similar bank back in 2020. There was a bank called Alameda based in Kansas, which had a similar situation go on. Obviously, not nearly as big of a bank as Silicon Valley Bank, so it's probably going to have a bit lasting of an effect. But at the moment, it seems like most of the contagion might just be localized to like venture capitalist funds, startups, and maybe just some big investors. But overall, it seems like most banks are pretty stable. We are seeing some panic in the market, so that might cause some fears. But at the moment, don't run to Chase and pull out your money. I don't think it's really worth doing that. So all in all, just want to give my thoughts on this developing topic. Hopefully you saw some benefit from this information. If you have any questions or you have any information to share with us, feel free to leave a comment down below. I'd be happy to read your thoughts about this situation, and I'll catch you in the next video.